Welcome everybody, my name is Steven Sitkowski and we're going to be talking about trading the financial markets, which is really a product of sitting at a computer for maybe 10-15 minutes a day. You can spend as much time or as little time as you'd like and trying to figure out how to make money with our fingers. So let me share with you, to begin, just some hypothetical trades. These were all trades that were available in the market. I know about them because I was involved in each of them. So the first trade you'll see was on eBay. We're using options here. This was a 30-day trade, produced a nice little profit of 32%. Then we have Tesla. Tesla's kind of an interesting business. Tesla last year lost about $2 billion. This year, probably lose more money than that. But the great thing about trading is that you can make money when a stock goes up or when a stock goes down. In this case, we actually put a trade together, assuming the stock would drop, and when it did, it yielded a big fat profit of 106% in 29 days. This is Micron Technologies. This was a 4-day trade in and out of the market, less than a week. You could have made 88% on that trade. Netflix, most people spend money with Netflix. There's other people who are making money with Netflix, trading stocks or trading the options. In this case, a 1-day trade, 45% profit. Imagine making in a day what takes somebody else 45 years to make with their money sitting inside of a bank account. And then this was an awesome trade on Adobe. 1-week trade, 248%. So here's a silly question for you. Would you like to be able to learn how to make money like this, as opposed to leaving your money, say, in bank accounts, credit unions, mutual funds? Now, of course, you're going to want to have some amount of money in the bank. But if that's what you're looking for to build a long-term nest egg, it is going to be a slow, long grind, as you already know. One of the questions I get is, well, if trading is so great, how come everybody doesn't do it? Well, I think it's just a matter of human nature. In my experience, in dealing with folks, everybody wants to look like this, right? Here's the problem. What are they willing to do to get there? That. So one of the things that we teach in all of our classes is how to align what you want with what you do. Building wealth is really predictable. If you do what wealthy people do, you get wealthy. If you do what broke people do, what happens? You go broke. So the question I would have you ask yourself right now, are you on the path to wealth, or are you on the path to mediocrity? So for those of you that say, man, I'm not on the path to wealth, we're going to talk about some of the things that wealthy people are doing with their money. I do want you to know that investing involves risk. There's no question about it. We don't make money on every trade. Why would somebody willingly accept risk with their capital? And of course, the answer is reward. What's the alternative? The alternative is you put your money in the bank. Bank pays you nothing. Cost of living is going up about, 3% a year? So in 30 years, you've lost 30% of your purchasing power. And the sad part is, this is what we teach people in school is the safe way to handle their money. And of course, it's not. Safety is producing a return that at least equals taxes and inflation, which right now is about 5%. So it takes 5% just to break even. My question to you would be, are you averaging 5% or more? And if not, you're falling behind. And you're probably, like so many people, feeling like, man, I'm working harder and harder and harder. I just don't seem to be gaining any traction. Let me tell you about a couple of people that we do business with. So one of our partners, a gentleman by the name of Jeff Tomasulo. Jeff manages a couple of hedge funds. To get into a hedge fund, you need to be what is called an accredited investor. What's an accredited investor? Typically somebody with a net worth of more than $1 million exclusive of their home. So Jeff was thinking, what about the people who aren't accredited, which is the vast majority of the populace in this country? Who's helping them? He did a little research and he found our company. He thought, these are the people I'm going to send my folks to, because he will help them to elevate, hopefully one day, to that accredited status. We also do work with Tony Robbins. I get the opportunity to speak on Tony's stage anywhere between 8 and 12 times a year, which are great events. Tony gets everybody all excited, and then I tell them what to do. And generally, these are big arenas, 5 to 10,000 people. And I just think it's awesome when people like Tony and people like Jeff and others have decided, of the companies out there training folks about the financial markets, that we were their first option. Let me tell you a little bit about our company. We're headquartered out of Utah. This building that you see, we built that building. You see a sample of our staff. We now represent about 700,000 students. Our footprint is literally worldwide. And it doesn't really matter where I go. Kind of the same story every place. You know, we take our kids, put them into a school system that is really designed to give them the skills so that one day they can go out and get a job and pay taxes. That's pretty much how the game is played. Well, we pick up where traditional education leaves off. We're on the Inc. 5000 list. We went and did a little survey of some of our students, and we asked them, on a scale of 1 to 5, how would you grade our services? We came in at a 4.8. We actually have a higher customer satisfaction ranking than either Apple or Disney. When people like you more than Disney, well, it tells you a lot about the quality of our work. Big part of our corporate culture is the idea of giving back. You know, when I first got started, I grew up in a relatively modest neighborhood. When I started thinking about success and began setting goals, it was all about things. You know, what if I could drive a Porsche, live in a nice home, vacation in Hawaii? And I was able to do all of that really in my late 20s. And then there was a shift. I remember looking at my home thinking, I pretty much have everything in life that I've ever wanted. How come I'm not happier? And then the thought occurred to me, maybe happiness doesn't come from things, but rather from investing in other people. And I've spent a good bit of my life doing that, supporting either other families, animal-related causes. And so I tell you that to tell you this. Most of us as human beings are more highly motivated by being able to give to others than going after the next shiny object to try to impress our neighbors, or in fact, try to impress perfect strangers. So if you decide to do business with us, you're going to hear in our classes just this whole idea of taking a part of what you're making and then using that to make society better, make your family better. And you're going to find that's where true motivation comes from. Our mission, we want you handling your own investments. I know and you know there's nobody on this planet who's going to watch your money more carefully than you, right? But wouldn't we agree that if you're going to do that, you need to be trained. You need to understand how investments work so you can work to your betterment, not to your detriment. In terms of my professional background, I've been licensed in real estate, insurance, securities, mortgage brokerage, been a certified financial planner and a registered investment advisor. I was on the adjunct faculty for the College for Financial Planning. I've written 2 books, one of which became a bestseller. I was on the staff that ran the retail side of a brokerage firm. And I've got about 40 years of experience as an investor and also helping and working with other investors. So I'm going to bring as much of that as I can to this webinar for you today. Outside of work, nobody thinks of me as a stock market guy. Everybody thinks of me as the animal guy. In fact, in my neighborhood, I'm known as the dog whisperer. I don't know the name of any of my neighbors, but I know the name of all of their dogs. So these are my babies. That is Rocco and Taylor. So I have a big passion for animals. I support Farm Sanctuary and some animal shelters that some of my friends are running, and it's awesome. You find your passion in life. So I am this guy's baby. That's my dad, 85 years of age, still kicking it. My dad is a former banker. And as a banker, he always told us, put your money in the bank, don't take any risk. Well, when I started doing better, of course, the first people I wanted to help were my parents. I remember sitting down with my mom and dad going, let me show you how to invest. And my dad's first response was, too risky. I don't want to do that. I said, fine, if you ever have a change of heart, just let me know. Well, fortunately, about 5 years down the road, my dad, seeing my lifestyle, said, son, you've got to teach me what you're doing. And so I taught him a very simple strategy, and my dad retired at the age of 62. Today lives in a free and clear home in a gated community, and until last year was basically driving a new Mercedes. So the same thing that I taught my dad, I'll be sharing with you on this webinar. I have a sister who I'm incredibly proud of, 11 months younger than I am, lived most of her adult life as a single mom. And I watched her go from barely being able to make ends meet to having all the money she would ever need for the rest of her life at about the age of 60. So the same kinds of things that I taught my sister, I will be sharing with you on this webinar. So let's get to it. Keys to success. Number one, a willingness to learn. The fact that you are watching this tells me you have that willingness. Do you know there are some people that will actually turn this off before they even get through the entire program? And they wonder why they don't have any money. So good for you, and be sure that you watch until the end. Next, it takes education. Now, there's two kinds of education out there. There's general education, that's what we get from school. And then there's what I call specific knowledge. That's what we go get on our own, specialized knowledge. So let's say you want to be a great golfer. What would you do? Hire a golf pro and practice. What if you want to be a pianist? You'd get a piano teacher and you would practice. What if you want to be a great investor or trader? You hire an expert, have them teach you, and then you practice. There's no great mysteries in life. And then, of course, in my world, it's about technology. It used to be about research. We don't have to do research anymore because of software, the advent of computers. All the research basically gets done for you. And we have developed our own little software program. I'm going to share that with you today and give you samples of what in fact that does. So what do we teach? We have strategies for income. I wonder how many of you right now would benefit from additional cash flow on a monthly basis. We have strategies that are designed more for long-term growth, for people thinking of retirement, or those of you who are retired. Maybe you'd like to stay retired. We'll teach you how to do that while limiting your risk. And also in our events, we actually show people how to go out and find trades. So we don't just talk about the stock market. We go into the stock market using our software to be able to identify good trading candidates. So let me give you a quick reality check. First of all, your broker is not your friend, even if they're your friend. Now, I'm not suggesting that these are bad people or that they're dishonest, but they do have a conflict of interest with you. Brokers don't get paid to make money for their client. They get paid to make money for the firm. And that's why they tend to sell you things like mutual funds and annuities, because there's big fat commissions that are associated. Those of you trying to play catch up, you need to make 15% or more to be able to do that. So if you're considering your age and your net worth and you realize, wait a second, I'm behind on this deal, 15% has got to be your target. So we'll talk about how people who are making 15% of the market are achieving those results. Those of you who are already in the financial markets, I'll bet you're not protected. And we will have a correction coming to this market. Market corrected in 1992, corrected in 2000, corrected in 2008. When markets correct, if you look at the last 3 or 4, they drop between 40 and 50%. And all of a sudden you find yourself starting all over again. You protect your home with homeowners insurance, right? You have car insurance. What kind of insurance do you have in your portfolio? For the average person, the answer is none. They are fully exposed. So there are ways to protect yourself. We'll talk about that. Here's the most exciting part of this presentation. We have an amazing opportunity. And the reason is we know how to make money when stocks go up. We know how to make money when stocks go sideways. There are also strategies for making money when the price of stocks go down. Imagine that. Price of a stock drops, the value of your portfolio goes up. And I think that when this market corrects, and I don't believe that we're far away from that. Now, I can't predict the future, but in looking at these cycles, frankly, we're overdue. Why do I think that? We have a market virtually at an all-time high, and interest rates are starting to go up. When those two things come together, typically markets fall. Not just the stock market, but the real estate market as well. And so we're going to talk about how do we turn that into a profitable event instead of into a loser. Now, those of you who are in the market, those of you who haven't participated in the market, this is a chart on what the market has done since 2009. It's up better than 300%. Those of you not in the market, I want you to look at that and go, I can't believe I missed it. I want you to get sick of missing it, to be tired of hearing about how other people are making money, and you are on the sidelines with your money sitting in a bank, basically making nothing. I have others of you who are in the market. You own stocks, you own mutual funds. You look at this chart and go, wait a second, I'm not up 300%. And by the way, 300% is not even good. That's just average. So what does that tell you? Your money's in the wrong place. It's not being managed appropriately. You could have made 300% simply owning the S&P 500 and doing nothing. No management whatsoever. So this is about making sure that all of you take advantage of what's available in the marketplace. So I have a new opportunity for you and a new game plan. This is what it looks like. We use options for short-term profits, for creating income, and for protecting what you have. We use stocks for passive income and then for longer-term wealth building. If you want to be able to make money regardless of whether the market goes up, down, or sideways, you need to understand both stocks and options and how they work together. So I'm going to be talking about both of those topics. So ready to dig in? Awesome. Let's begin with how we pick a stock. We start with what are called the fundamentals. Now, when you talk about fundamentals, we're talking about the numbers. Investing in the stock market, it's all about numbers. It is not about the brands. So what numbers should you be concerned with? First of all, earnings. How much money does this business make? You should only be interested in companies that are growing their earnings at least 10% a year. 10% a year. Then we have revenues. That's a top line number. That's sales. You only want to invest in companies growing sales at least 7% per year. Then dividends. Not only do we want companies that pay a dividend, that's where your passive income comes from, but we want to see that that dividend has increased each of the last 5 years. And then finally, we want to look at what the insiders are doing. Who are the insiders? Key executives within a company, people who sit on the board of directors, big institutional investors. I think we can all agree these insiders know more than anybody about what's happening with that business. So when these insiders are buying, what do you think you ought to be doing? Yeah, you might want to consider buying. What does it tell you when the people who know everything about that business, when they're selling their shares? It might be time for you to get out. Now, our software captures all of this data and interprets it for you. And I'm going to show you what that looks like here in just a bit. The next piece of analysis we call technical analysis. This is where we learn to read a chart. Everybody's got to know how to read a chart. What does a chart tell us? It tells us what direction the stock is likely to go next. Now, when you look at a chart, there's a number of different indicators on there. Let me start with something pretty simple called moving averages. So for your notes, I'm going to give you two numbers. The first number is 15-day 1-5. Second number is 50-day 5-0. So let me show you what this looks like. This is an old chart on Apple. You notice we have two lines. We have a blue line and a red line. The blue line is the 15-day moving average. The red line is the 50-day. So right where you see the green arrow, this is where the two lines have crossed, indicating the beginning of a bullish mood and an uptrend. And so this is where we would jump in and you ride this wave until it collapses. See the red arrow here? This is where we would jump out. So that could have produced a 65% profit in about 6 months. Then we wait for the next wave. See where the two lines cross again? Jump back in, see the red arrow, jump back out. The beautiful part is then we avoid that big drop. So here's what I see with a lot of people. They buy a stock, the stock actually goes up, which is great, then they don't sell it, and then the stock goes back down. That, of course, gets you no place. So let me kind of summarize the stock piece. How do we maximize profits in the stock market? First, we identify these great companies based on what? Based on their numbers. And we're only in them while the market is moving up. Now let me give you a couple of other little tips here, things to think about. First of all, do not get emotionally involved with your stocks. You're not marrying these stocks, you're dating them. It's temporary. Secondly, I don't like to own more than 5 or 10 stocks at a time. The reason for that, just the amount of time it's going to take to keep up with your portfolio. Personally, I want a portfolio I can manage in 5 to 10 minutes a day. So this is the way that we do it. Make sense? Awesome. Now, for those of you who may not have enough money to be able to purchase stocks, I have great news. I want to talk to you about options. I love options. What's so great about options? Well, first of all, leverage. What does leverage mean? Leverage means a 1% move in the value of the stock can result in a 10 to 20% move in the value of the option. So options are one of the few places that give us a legitimate chance to make a lot of money in a relatively short period of time. Most of our option trades are 1 to 4 weeks. So this is not a long-term investment. It is a short-term investment. You have limited risk with an option. When you buy an option, the most money you can lose is whatever you paid for the option. When you buy a stock, how much money can you lose? That's right, all of it. So do you want to risk $100 a share, or do you want to risk $1 a share? With options, we have unlimited profit potential while having limited downside risk. So we can also use options for protection. Let me tell you a little story. I was teaching one of our 3-day classes, and a guy comes up to me on break. He said, "Hey, can I pick your brain a little bit?" I'm like, "Sure, that's why I'm here." He said, "I own a lot of Apple stock." I'm like, "Well, that's awesome. You've made a lot of money." He goes, "I really have, but I'm starting to get nervous. I'm worried that this market is going to correct." And I said, "Well, at some point it is going to correct." He said, "What do I do about that?" So at the time, Apple was trading for $115 a share. He didn't want to sell because if Apple went up, he'd miss the opportunity. But he was concerned that if he held and we went through this correction, that he could stand to lose a lot of money. So I said, "Well, what if you just bought a 110 strike put? Let's look at your position. If Apple goes up to 150, you could sell it for 150. But if Apple were to drop to 70, that put option becomes your security blanket. You could use the put to cash in your stock and get $110 a share. Unlimited profit potential, limited downside risk." Don't you love the way that sounds? So this is how we teach people to be able to participate with stocks and be able to weather any of the downdrafts that the market provides us. Now, most of you are probably new to the world of options. Here's the good news. There's only 2 types of options. The first type of an option is known as a call option. A call option gives us the right to buy a stock. We buy call options on stocks we think are going higher. The other type of an option is known as a put option. A put option gives us the right to sell a stock. We buy put options on stocks we think are going lower. Stocks going higher, we buy calls. Going lower, we buy puts. Here's a great little trick for remembering that. Think of a telephone. How do we use a phone? We use it to call up. We get done with a call, we put it down. Call up, put down. Hopefully that'll help you to remember. All right, let me show you an example of an actual trade. This was a trade on Disney, and this was when Disney was at $94 a share. Had you been looking at the chart, known about technical analysis, it was most likely that this stock was going to go higher. All right, so if you think a stock's going to go higher, you have 2 choices. Number 1, buy the stock. Whenever you buy the stock, we always recommend you do it in what are called round lots. Those are 100 share units. So 100 shares at $94 a share, that would take $9,400. Some of you have that, some of you don't. The alternative would be to buy call options. Remember call up? Options trade in contracts. Each contract controls 100 shares. Now at that time, the options for Disney stock were 93 cents a share. 93 cents times 100, $93. Everybody can afford $93 to get into the game. Well, Disney did exactly what we thought it would do. It went higher. So let's say that at the time you were making this decision, you had $1,000 to allocate to the trade. You're trying to figure out, should I buy the stock? Should I buy the options? Well, let's take a look. With $1,000, you would have enough money to purchase 10 shares of stock. 10 shares times $94 a share, $940. With the same amount of money, you could have bought 10 call options. Remember, each contract was $93 a share, your total $930. Let's compare the profit potential. Well, Disney went up $7 a share. So if you own 10 shares of stock, your profit would have been $7. On the other hand, if you would have bought the options, you'd have controlled 1,000 shares, your profit, $2,820. Isn't that awesome? Same investment. Instead of making $70, $2,820. Imagine if you could make the same amount of money on a single trade that some people make working full-time for the month. Remember I talked to you earlier about the importance of specialized knowledge? And you know what? Less than 1% of the investors understand how to do this because all they've been taught, put your money in the bank, turn around and buy mutual funds or pick up annuity contracts. Now, in fairness to you, I think if I'm going to talk about a winning trade, I should also talk about a losing trade. And this was a losing trade for me, so I take this one real personally. One of the things that we teach our students is always trade with the trend. Well, you can see when you look at this chart, and this was a 6-month chart on Tesla. At the end of the chart, Tesla was headed down, right? We can all see that. Notice the little green candle there? Well, I thought that's when Tesla was going to turn around, and I was going to beat everybody to the punch. And I bought call options. And then Tesla continued its downward movement, and I turned around and sold those calls. Lost money on it. So it's a moral of the story. Number one, you've got to know what you're doing. Number two, you have to have the discipline to follow the rules. So in all of our classes, man, we drive that into the minds of our traders. All right. I told you that I would talk about the same strategy that I shared with my dad. So this was it. It's known as a covered call. Here's how the strategy works. We start with a high quality stock, and there are hundreds of them to pick from. The idea is on a monthly basis, we're going to sell somebody the right to buy that stock from us. In exchange for that right, they give us money. Kind of a cool concept. So this will generate cash flow, but if you dig a little deeper, it's a way to reduce your cost basis. And I know that's a new term for you, so let me show this to you. I'm going to share a case study I did in one of my 3-day classes. I let the class vote. They wanted to look at Microsoft because, of course, everybody in class knows that company. At the time, Microsoft was trading for $73.40 a share. We then pulled up an option chain and found out that we could sell calls against Microsoft and pick up $1.40 per share for about 30 days. So that's $1.40 for the month per share, plus Microsoft pays a dividend. When you do the math and you look at selling call options against this position plus the dividend, that produced a 25% potential rate of return. Listen to this, on a stock that doesn't even have to go up 1 penny. What if somebody told you you could make 25% a year on stocks that don't even go up? That would change your entire paradigm about the stock market. And this is the beauty of being able to understand both stocks and options and put those two instruments together in one nice little trade. Another way to look at this is you could actually buy Microsoft if you were able to generate a 25% rate of return. In 4 years, you've got all your money back. So if you've got all your money back from the trade, how much is your risk? Nothing. Now you're playing on house's money. And then you just sit back and collect dividends till the day that you die. Don't you wish you'd have started doing this 4 or 5 years ago? Yeah, well, we can't go back in time. How about we focus on the next 4 or 5 years? Okay, what about those of you who don't have the money to buy 100 shares of Microsoft? I'm going to teach you a little strategy that you can use to be able to make money on stocks you don't even own. This is known as a credit spread. It is my favorite strategy. So to understand credit spreads, I'm going to use the analogy of a bowling alley because I'm a terrible bowler. The only way that I'd get a good score in bowling is basically if they change the rules. If they said, listen, for you, as long as you don't throw the ball in the gutter, we're going to count that as a strike. Well, they're not going to do that. But I can create the same effect in the stock market. Check this out. Let's say I'm looking at a $50 stock. And I could set up a trade so that as long as the stock didn't go above, say, 55 or below 45 in the next 30 days, I would get a credit. How much would the credit be? It's going to vary from stock to stock, but I've seen credits as low as 2% for the month and as high as 20% for the month. Now, these trades are not guarantees, but could you imagine if you could employ your money generating that kind of return? It is the best income strategy that I'm aware of. Making money on stocks you don't even own. You can set these trades up weekly, you can do them monthly, and they can be high probability trades. Now, nothing is 100% certain. We all know that. But you can put together trades that have a statistical probability of profit of 80% or higher. And in fact, in our classes, we recommend people don't even take a trade unless it's got an 80% probability. So that is something for you to look forward to. In all of our teachings, one of our core strategies after people understand basic options are these credit spreads. All right, so we've already covered a lot of ground, haven't we? What have you learned? You know a little bit about picking a stock, find companies that have growing earnings, growing revenues, growing dividends, where the insiders are buying. You now know that once you own a stock, you can protect your position with a put option. You know that you can sell calls against your stock to create monthly income. If you don't have enough money to buy a stock, where do we start? We start with options. What kind of options do we buy? On stocks going higher, we buy call options. On stocks going lower, we buy put options. And now you've learned you can actually make money on stocks that you don't even own using a strategy known as a credit spread. Have you learned anything new? So if you could learn all that in 20 or 30 minutes, imagine what you could learn if we had your attention for 2-3 days. Man, we could teach you so much and show you how to actually do some of the things that I've been in here talking about. So what can you trade? Everything that I've discussed is eligible for IRA money. For those of you who are self-employed, if you have a SEP IRA, every strategy, you can buy stocks, you can do covered calls, you can do credit spreads, you can buy calls and puts, they're all eligible. Those of you who have 401ks, I know that money is probably sitting in a mutual fund. With most 401k plans, you can actually borrow against them. When you borrow money, that is tax-free and penalty-free. That money could be used for your trading account. And money you've got sitting in checking and savings, making nothing, maybe you should allocate some of that to some of these strategies. You know, here's one of the things I've learned that separates wealthy people from everybody else. Wealthy people have their money working for them. Everybody else makes everybody but them rich. Think about it. You're making your employer rich, banks rich, credit unions rich, mutual fund companies, stock brokerage firms, mortgage companies, credit card companies. What are you doing to build your own net worth? You've got to get your money working for you. Treat it like an employee. Now, I mentioned earlier that part of good trading is the utilization of technology, of software programs. We have developed our own. And here's what's really cool. Software used to be unbelievably expensive. Not anymore. We offer our software to our students for $29.95 per month. No long-term contracts, stop, start anytime that you want. Let me show you what the software will do. And I'm going to start with how it looks at a stock. Basically, it checks out a company on 4 criteria. The first one are the fundamentals. You and I, we don't need to crunch the numbers. The software does it. Looks at earnings and revenues, etc. And then it color codes it. Green means numbers are good. Red, numbers are bad. Yellow, so-so. Then the technical. So it evaluates the chart and the indicators on the chart and tells us whether this stock is more likely to go up, down, or sideways. Then it looks at the insiders. Are they buying? Are they selling? Are they holding? And then finally, valuation. And we haven't discussed this. This is the type of a model used by people like Warren Buffett. So it looks at all the numbers on the company, looks at the current price of the stock, and lets us know whether this stock is underpriced, fairly priced, or overpriced. Very handy piece of information. So I can now evaluate a stock in maybe a minute It used to take all day. I'll also tell you that the software, it'll screen for certain types of stocks. So let's say I was looking for stocks that were all green because I wanted to take bullish trades. It goes out and finds those. What if I wanted to take bearish trades? Say I wanted to buy a put option. It'll show me stocks that are all red. It'll find stocks that have dividends coming up. It will show me stocks that are moving sideways. If I want to take that bowling alley approach and do credit spread, it's just remarkable. So in our classes, you get an orientation on the software. Now, I also want you to know that embedded in the software, and by the way, it's all web-based. You don't have to download anything. Embedded in the software are a series of videos. It shows you how to use and how to navigate the software. It'll integrate with certain brokerage accounts. You never have to leave the platform. And to help you get started, it's got a built-in virtual trading account. So think of it like Monopoly money. You can start taking all these trades using the strategies and practice before you use real capital. So it starts off with $100,000. I tell people when you can take that $100,000 account, turn it into $200,000, well, then you can afford to buy a virtual Mercedes. So try that out. Okay, we've talked about how we use the stock or the software for picking a stock. How about for an option? Well, let me give you a couple of examples. You'll notice that on the screen, all we have is a chart. There's no numbers. When we do option trades, it's all about momentum. I don't care what the company does. I don't care if they make money, lose money. It's irrelevant. So basically, we look at three different indicators. The top one is a moving average. The middle one is a MACD. The bottom one is a stochastic. And through your education, we're going to teach you how to use these. You may also notice there are some little darts on there, either red or green. Green means likely to go higher. Red means likely to go lower. So notice in the little yellow circle, there is a green dart. Then there's another green dart and another green dart. So what do you think this stock is likely to do next? Yeah, go up. So what type of an option would we use? A call or a put? Great, a call option. So this is our trading platform. Calls are on the left, puts are on the right. If you look carefully on the left-hand side down toward the bottom, you see the number 10. That's 10 contracts. Now, I want you to know that when you're doing option trades, you don't have to do 10 contracts. You can do one. Had you done 10 contracts on this trade, potential profit $16,290. That's not even the best part. Here's the best part. Can't you keep doing this? So while the stock is moving up, we can be purchasing call options. And when we start to go down, we can be purchasing put options. So you can make money again and again and again on the very same stock. And if you notice that all things tend to run in cycles, sure. Let me give you another illustration. This was Costco right after Amazon bought Whole Foods and scared everybody in the retail sector. I pulled up the chart and this is what I saw. Red, red, red. What direction do you think this stock's going? Yeah, down. What kind of an option would we want to buy? Sure, a put option. So again, had you bought 10 put options, potential profit here, $7,100. Now both of these are hypothetical trades, but these are actual numbers from the time that you could have placed the trade. So I just want you to see the power here. And I also want you to realize there's a world that exists that most of you have never been exposed to because you've lacked the specialized knowledge. We don't teach this in high school. We don't even teach it in college. You could graduate from a prestigious university with a master's in finance and not know how to do this. You've got to come to people who specialize in this area, and of course, that's us. Now, let me show you the power of compounding, because that's what it's all about. Wealth building is about compounding profits. Let's say that you had $10,000 to invest, and you placed it in an account that averaged 3%. In 30 years, you end up with enough money to retire for about 5 months. If you knew how to make 8%, you would end up with enough money to retire for a couple of years. At 15%, you could probably retire for a dozen years. But at 20%, you could retire for the rest of your life. Specialized knowledge versus general education. Now, I'm not tying these returns to any particular strategy or making a guarantee, But Einstein called compound interest the eighth wonder of the world, and that's why. So if I were to look at your tax returns, how much passive income would I see? If I were to look at your investment performance, you're compounding at what rate of return? You understand the importance now of making every dollar work for you, treated like an employee. What if you don't have $10,000? You know, when my sister got started, she only put away like $100 a month. But even at $100 a month, if you were able to achieve 20% in 30 years, that's 1.7 million. It doesn't matter how much you're starting with. Here's what matters. You've got to get your money working. And in order to do that, it's going to require some training. So let me tell you where I see the opportunity. This is the most important slide, then we'll start to wrap up. I'm going to take you back to 2008, before the market corrected. What if in 2008 you had gone through our training program and you understood how to read a chart and how to evaluate what was happening in the market, and you saw that this market was starting to correct and you understood options? What if you had gone out there and bought a bunch of put options? Say you took $10,000, invested in puts. The S&P dropped 44% in 3 months. Using leverage, that could have turned $10,000 into potentially $80,000. What if you had reinvested $50,000 of that? Use it to buy stock in Starbucks, Apple, MasterCard, Nike, and Priceline. Where would you be sitting today? Yeah, we both know the answer. Why did I take you back to 2008? Because everything that I saw happening then, it's happening right now. The market had gone up 8 consecutive years, just like now. Fed was raising interest rates, just like now. The stock market, the bond market, the real estate market were at all-time highs, just like now. Here's the point. I've seen this movie before. It comes out every 7 to 10 years, and let me tell you how it ends. People with specialized knowledge have a chance to make a fortune. Everybody else gets run over. So let me talk to you about how we train people. I mentioned to you that we do these 3-day live workshops, and we hold them all over the country. Our students get an opportunity to be able to participate in these, and they are fantastic. Let me show you what you're going to learn. On day number 1, we go through goal setting. If you don't know what you want, how do you know what to do? So we're going to have you put together some specific written goals. Then we're going to teach you how to be able to analyze market trends so you know when to get in and when to get out. How to set up your online brokerage account. And you could choose any broker that you would like. We'll go through some option basics and look at some case studies. So we're going to go back and look at trades that you could have put on it, showing you how they worked out and why they worked out the way that they did. On day number 2, we do one-on-one consultations because all of you are different, right? So some of you have bigger net worths, others smaller net worths. So you need a customized trading plan that fits your particular situation. We're going to teach you how to be able to get out of mutual funds because the fees are too high and instead use what are called exchange traded funds. Going to teach you how to be able to read a chart. We're going to spend a lot of time on that. To be an option trader, you've got to be able to evaluate what the trend is doing. We'll teach you how to buy puts and calls. We go live into the market and look at actual trading opportunities and then show you how to navigate the trading tool. And the last day is all about strategy. Protected puts, covered calls, that credit spread trade. Can't wait for you to learn that. Straddles and strangles, we use that around earnings announcements. Passive income for retirees like my dad. And then building your trade plan. So very comprehensive, a lot of information in a short period of time. Now, I want you to know something. At the end of the 3 days, you are not going to leave there a trading expert. Nobody learns how to do anything in 3 days. But in 3 days, tell you what, you'll know enough to be able to get yourself started. So this is what we offer. We have the 3-day class. By the way, the class has been recorded so you can go back and review the strategies as you need to. Provide you a workbook for keeping track of your notes. We have a support line. So if you get stumped or you need some help, we have people that are accustomed to dealing with folks like you who are not professional traders. Unlimited email support and then access to the software. All right, so let's talk about tuition. We have a one-time lifetime tuition of $997. That's it. You have to ask yourself, how many trades would I need to be able to take to make back $997? And those of you who act now and join with us, that's not for one of you. It's for two of you. So you both can come to the class. Both of you have access to the software, and you can set up separate trading accounts. Here's another thing. You're going to love this. One of the things that we have to study is human behavior. You get people get very excited about something, and their excitement can be short-lived. We would do our presentations and have people pay for the class and not show up. I know that's hard for some of you to believe. Why would somebody pay the money? I don't know. If I paid the money, I would certainly be there. Well, that's bad for us, and it's bad for you. We want people to spend the money to be successful and go out and sing our praises. So we thought, what can we do to ensure that the people who enroll actually participate? Well, this is a class about money. Why not financially incentivize them? So listen very carefully. Those of you who enroll in the class and actually show up and then set up an account and go out and trade. So over the next 60 days, we want you to go out and take 15 trades. Getting started is always the hardest part. They don't have to be big trades. Average trade, $70 a trade. You can have some that are more, some that are less. Have them average about $70. Once you've done those two things, now you're well on your way. I think you'd agree with that. Here's what I want you to do. Once you've completed the class and your trades, pick up the phone, call us, tell us the class that you attended, the trades that you've taken, and we will rebate you half of your tuition. That's right. We're going to send you back a check for $500, so the total investment in the class net to you, $497 for this type of specialized knowledge. And here's the beauty. Once you learn how to do it, it's a skill you will use for the rest of your life and hopefully pass along to people in your life who are important to you, whether it's kids, grandkids, other members of your family, friends, people at church. These are the kind of things everybody should know about the market. So to get you started, here's all you have to do. You can see on your screen that we provided you a form. Simply take a couple minutes, complete the form right now. All we're looking for is some basic information, and one of my associates will give you a call here in the next day or so, and we'll walk you through the process and show you how to get started. All right, hope you enjoyed this. Looking forward to seeing you at an upcoming workshop. Until then, God bless.